All right, so it is the 1st of January 2018. My name is Jameson. Welcome to Behringer Trading. Hey, thanks for the chart request. We're looking here at TKC, and we're going to look at a couple different time frames. I generally won't spend as much time doing these chart reviews as I believe I will for this one. And really, when I first saw this, my first response would be very dismissive of this because it's just a continuation pattern, and essentially, well, buy the dips, go away. But let's take a look at it here. And you have to excuse me, I've been really sick the last, it's going about 2 weeks now. So I'm having a hard time getting over it. So let's continue here, and we're looking at a daily vertical bar chart here of TKC. So as we can see, if we just look at the chart organically itself, we have a bullish ascending channel. If I were to draw a trend line here, let's actually just take the time to do it because we have time. Let's see here. So if we just draw, right through here, we copy this and bring this down. It's called a reverse trend line. So anytime you draw a trend line and you just copy and bring it down, you draw parallel lines. We call that a reverse trend line. Sometimes it's difficult because we don't have a clear level resistance. So we'll find multi areas that were tested here in the lows, and then we'll copy and bring that forward. So reverse trend line. But what we have here is a continuation pattern. So we have a nice trend. It's trading very well within this bullish ascending channel. And the moving averages here reflect that the trend has been accepted. We have the purple, blue, yellow, and red. So I keep these pretty routinely the same, but purple is the 20-day moving average. We're looking at a 50-day, 100-day, and then a 200-day moving average. Now, if we just come up here and look at the technicals here, let's pull up the RSI, slow stow, and the MACD. So the MACD is kind of on the high side. What does that mean? Well, I don't know, but let's look at what it has meant in the past and if it's tradable. So historically, in the 12-month period that we're looking at, when it has entered this range, I would call this a threshold. And essentially, as it's hit this threshold, it generally has lost momentum and either trades laterally or breaks back down into the 50, even maybe the 100-day simple moving average or the lower trend line, the demand line, before it finds some extra participants, some buyers, and then just kind of continue the pattern here. So looking at the the technicals here, the slow stow and the MACD, this might be a short-term top here. If you look at the RSI really is it's non-specific. I would say that it's bullish, and there would be more room to go before it's overbought. So there's still some more upside there in the RSI. Looking at how prices are trading into the level, I'd say that we're trading in the resistance. So if this is a new position, it's difficult to advocate, go ahead and buy this. We're buying in the resistance. So from a basic trade perspective, we want to buy low and sell high. And that opportunity presents itself here on the lower trend line along these averages as opposed to, buying long here. So I guess from a risk reward standpoint, shorts would temporarily on the daily time frame have a better entry from a trading perspective as far as a risk reward, because obviously if they went short and it went through this level of resistance, they would stop out. Otherwise, they would probably take profits into the moving averages or the lower trend line that's here. So just depends on what you're looking at, what time frame you're looking at. But from longs, this is a bullish position. You want to look for opportunities to buy the dip that's here. So there's that. Now, we'll look at volume in a minute, but anytime I look at a stock, I want to make sure that it has some positive relative strength. So I do look at its performance relative to the market and its industry. So what we'll see here is that we can see very clearly, let me just remind myself what I'm looking at, TKC. So we can see here that TKC has been outperforming the market. So we can see that relative strength-wise, we have a nice bullish trend here, which says that it is going up at a rate faster than that of the Vanguard Total Stock Market Fund. So there's been positive relative strength. As we transition to a new year with markets at high, we want to make sure that we're buying stocks that are showing positive relative strength, and this is a good one. If we look at its performance here relative to its industry or relative to its peers, we can see that it also reflects a bullish positive relative strength. And that's important. So now if we just look at the sector itself and then the index, we can see that the technology sector relative to the market actually has been cooling off. So that just kind of shows how strong they've been performing, because the sector has kind of been underperforming, yet they have been outperforming. So that just speaks as to the interests, the participants, or the strength that's present here in the stock. Now, if we look at the industry relative to the sector, we can see that that actually has been underperforming, but we're starting to maybe see some rotation here into the industry. So if this is important, because if the industry starts to see some positive relative strength, and if the sector sees some money rotate back to the sector, chances are, where is that money going to go to? It'll generally go back to those that do have relative strength, and TKC would be one of those that would do so. Now, I do have a ADX down here. This is just a trend tool. We'll go over that in a minute. And I generally, again, like I said, I wouldn't spend so much time on this, but I'm going to see if I can't give you a tool or a simple trading strategy that may help you have some increased confidence in maybe buying the dip here with this stock. So that's the daily time frame. Let's move over here to the weekly. So when we look at a weekly time frame, this is pretty strong. I mean, this is a pretty attractive trade. We're trading here to the new highs. This is 2017, 2016. Looks like we have new highs since, mid 2016. That's bullish. We can see here that the 20 and 40 week simple moving averages are rising, and it looks like that 20 week moving average is a good buying opportunity. So if it presents, chances are we'll continue to see some buyers that are there. If we kind of look, we kind of had this kind of bottom formation. Looks like a little inverse head and shoulders. Generally, sorry about that. If you do a measured rule, kind of just identify the neckline, the distance from the head to the neckline would kind of give you 100% retracement. Again, I'm just kind of eyeing that, but let's say that's about we'll just say $8. So we'll say 6 to 8, that's $2 move. So we'll just go for 2 there, so 10. So I would loosely say that it's fulfilled its measured move with this kind of basing formation that we have. But one of the things that's important is, do we have supply? Do we have weak hands? Let's go back to this daily chart. And on the daily chart, we see this, this is kind of climactic buying here. And you can see that this climactic buying was kind of a buying climax. Prices consolidated. It tried to rally again higher. A lot of volume presented through here. Didn't really sustain new highs. Probably some distributions, taking some profit there. Probably took some more profit here, and then prices broke down. We had some supply present, but as it kind of as it consolidated here in the 100-day simple moving average, we can see here visually that the supply contracted. There's no more weak hands, and then as it rallied higher, we can see that there's some volume associated with that. So there's some extra buyers that's here. The character at which that it's rallying through here, that's kind of gapping up with increased ease of upward movement, it's very bullish. So this happened very quickly, which signifies that people are chasing this. So the fact that this is very emotional and people are chasing this, I would also then expect some consolidation, and that's kind of what happened here for the next 6 weeks, which kind of forms a bull flag. So if you do a bull flag here, the general kind of measured move would be, I think 75 to 100% of the actual flagpole. And again, you kind of project that forward. We can see that also has been met. So it might be time here to kind of consolidate and move into the daily chart. We also can see that volume on the buy side relative to previous peaks is not so much. So I know it's the holidays. I hear that excuse all the time. Truthfully, I don't care. I don't even entertain the idea of limited trading days. There's not a lot of volume. There's less participation here. Chances are that shows that there's less demand, at highs, and that would also support, prices pulling back, which we also visually can start to see here in the indicators that are present. So that's again the daily time frame. We come back to the weekly time frame. I like this. Here's the ADX again, and let's go here to the monthly time frame. So this is awesome, and I think that this speaks how strong that it's actually doing. Now, I look at volume profile on my other trading platforms. I guess today I added it back here to stock charts, especially since I'm looking at some monthly time frames. And the reason is that we can see as it kind of traded through here, there's kind of some asymmetry that was present, and that kind of when I say asymmetry, there's not a lot of volume. There's very poor market structure through here, and that might have been one of the reasons that it allowed prices, once it got back through this area, to trade with such aggressiveness, and they had a nice 9% return for December here. But we can see that this also is a very important level of support that was lost. It was confirmed as resistance, so it looks like we're going to go back and at least test that. So we're trading into resistance from the buy side on the monthly chart. So although I see some a period that we may have to rest here in the daily chart, it looks like from the weekly perspective that we're still closing at highs. Volume's contracting, so maybe we break back down into the into tens, kind of consolidate a little bit, and then we kind of continue higher. The monthly chart looks like we should at least retest into this previous level of supply, confirm it as resistance, but we can also see there's a lot of market structure there. So if we continue to consolidate through here, we see some more asymmetry through this 11 to 1175. So if we can get through there, I really feel comfortable that we'll retest highs here into this $13 range. And that at that time, I'm sure that we would have a lot of profit taking, right? A lot of longs invested a lot of money, time, and emotion. They want to protect their profits, so they'll take some profits through here. We'll have some bag holders that have been holding this stock for probably a couple of years. They'll be very happy to tell their spouses that they broke even. And then we'll have some new shorts that enter here. So I would imagine as we re-enter this zone here that we would see some consolidation just because of the mechanics of profit taking, new shorts, and then bag holders breaking even. So I like that trade. Now, let's look at this ADX, and I'm not going to get too much into it, but this is a trend tool. So what we can see here in the monthly chart is that I would like to see this, the actual ADX, the average directional trend here at 20. That kind of signifies that we actually have an acceptable trend. But let's just look at the little green and red indicator that we have. So green side's positive and it's up, so we're actually trending, and that's bullish. Now if we look at the weekly time frame, same thing, and we can see here the ADX, the black line, actually is justifying or accepts that yes, there's a bullish trend. And we look at the daily here. Let's actually get rid of all this other stuff. And now let's just add the ADX back. It'll kind of create a little bit less noise. Update. All right, so now we're back here on positive. So the reason I want to bring this up is because if we anticipate a pullback, it's always difficult to have the confidence, because it's scary when prices pull back, to have the confidence to buy weakness. But truly that's when money's made, is that you buy weakness and you sell strength. So if we speculate that prices either consolidate and trade laterally, that's fine. If everything stays green on all three time frames, then you have the reassurance to say, look, I'm buying strength. That's a bullish trend. But if prices pull back, it's very difficult to buy this 100-day simple moving average. So what we can see here, let's just look at this time frame. And I haven't looked at this chart yet, so let's just hope that this works. So we're going to look at this is going to be look at September to October 2017. So we can see prices are pulling back into the 100-day moving average, and it's red. So that's scary. Now, if we look at the weekly time frame, let me remind myself here. So we're looking at September, October again. So September to October, we are here. So you can see here during September of October on the weekly time frame, the trend is still bullish, and we're still on the green side as far as the indicator. And if we look at the monthly chart, we are also positive. So when we have when it remains positive on the monthly side and it's also positive on the weekly side, that just kind of gives you the reassurance that although it's red here, maybe when it actually maybe you look at a 4-hour chart. Let's actually look at a 4-hour chart here. So in other words, if it's green on the other two time frames and it's red here and it's traded into a level of support, kind of gives you increased confidence that you can actually buy the dip. If we look at a 4-hour chart, we may be able to, let's see here. Oh, we don't have 4 hours on here, just 2 hours. Here, might be a little choppy here. We're looking at 2 hours. and we're not going to have that time frame. Let's go back 6 months. Let's have some fun. So it's a little bit messy, a little bit more artifact, but we're looking again at that September to October. So this is that consolidation. So this is actually really interesting. This is cool. So in I guess a technical nerdy kind of way. So we can see that this is that scary part when prices went down, and the averages here are now reflecting the 2-hour time frame, so they're going to be all screwy. But we can still see the dip, and on a daily time frame, this is the 100-day simple moving average. Now you can see that the ADX here actually turned red. Again, don't want to buy that on the daily. I mean, if you buy that on the daily chart, it looks like you're just kind of buying weakness, despite the weekly and the monthly still saying it's green. So if we look at a smaller time frame, the 2-hour, which is what we're looking at, again, it's red, it's red, it's red, it's red. I want to buy the dip, but I need some confidence. So if you look here, it flips green, and it flips green here on the 2-hour chart. It flips green here on the 2-hour chart, and look at this, it's still at lows. That actually gives us a good strong entry there. So we're flipping green here. Now the actual ADX here is on the low side, so that's not kind of ideal. You can essentially wait for it to turn up, but as we wait for it to turn up, where does it actually put us? Are we getting the lowest entry here? So let's see, now we're up, ADX is rising. So it gets you a re-entry here, but we're not quite at the dip. So it just kind of depends on how much confirmation that you want. But you can see here, right down here, that we're actually turning green. Again, we have more green, so that it may, if you're watching that 2-hour, 2-hour time frame and then the daily time frame, if this stays green and then on the daily it doesn't kind of continue to slope down, this is your buy the dip indicator. So you buy the dip, it trends out, and now you actually have your nice little rally. And then there you are. And if we go back to the daily, you can see the daily time frame. Yep, so now the daily time frame, let's go back and put all the information back on here. Nope, fill. I'm sorry, it's still 2-hour here, and fill a chart. All right, so daily time frame, we can see that it's all still red, and if you wait for it to turn green again on this daily vertical bar chart, it's maybe not the it's maybe not the best entry, although the discipline and patience would pay off. So if you wait for the turn green on the daily, you're looking at an entry right about here. So that's actually a very good entry point to get in there too, because if you look, we actually are just breaking out of that consolidation base. So that's a very responsible place, to re-enter. So if you're looking to build a position, maybe by like a quarter position, and then as it breaks back out here, you add to that quarter position, and now you want to wait because you want this to be kind of confirmed. This is resistance. You want to make sure that resistance is confirmed to support. So now you got a quarter position. You bought a quarter position here. You're waiting for the back test. It's back testing. Oh, we're back down at 100. If we're still green, I'll add a quarter position and we kind of rally up, and now you have a full position and you're participating in this trend. So bottom line is it's a bullish stock. It's a nice continuation pattern. Maybe this ADX tool indicator is something that you could find useful to give you some increased confidence to kind of buy the dip. I don't know. This went a little bit longer than I'd like, but I feel like I had the time this evening. I hope you found that helpful, and good luck this year.